Pramod Gubbi of Marcellus Investment Managers is joining us right now on the show. Pramod, thanks very much for taking out the time. And I see you're home quarantine too, working from home. But, these are tough times. And from a market standpoint, it's very difficult to take a call on the back of a few short-term rallies that you get, whether or not time to invest has come. When the uncertainty that lies ahead is so vast, because this is nothing compared to a financial crisis where the problem was specific, the resolution to that problem was also a few specific steps that were taken and the matter was resolved. This is a matter of a different proportion altogether, and therefore to make a gauge on how to invest is a very tricky proposition at this point.
Well, it never is. It never is an easy proposition, especially in terms of timing the market. Forget about these times. Even in normal times, we wouldn't recommend timing the market. That's perhaps the hardest part of our job, and almost next to being impossible. What we can do while investing is, try to focus on fundamentals. Ultimately, the stocks that you invest in, you would like to invest in at a price which is significantly below what is your best assessment of its long-term fundamental value. And the fundamental value doesn't lie in the earnings of a business for a quarter or two. It's literally as defined. It's the present value of the cash flows to perpetuity. So to that extent, I think we will all do ourselves a favor by focusing more on the long-term fundamentals and trying to assess the events that are happening around us. Will they have any bearing on those long-term fundamentals? In most cases, I think unless and until this whole thing spreads into something that's totally unprecedented, something that none of us can actually fathom, in most cases, I think the long-term fundamental value will remain intact by and large. There will be short-term earnings downgrade. There will be recession pretty much across the globe. But will that affect the long-term fundamental value of the company? As long as the company has a strong balance sheet to weather the storm, has a strong competitive advantage to look through the short-term weakness, I think that's pretty much the only thing that an investor can focus on. And if the stock markets are giving you a price point which is significantly below that fundamental value, I don't think there is any great merit in trying to time your entry. You should start buying. Now, what the question is, would you deploy everything that's at your behest in one go, or should you start nibbling? I think that's a matter of choice, and I think there are merits to both. But we are in the camp that if we find value there, we would pretty much like to put our money to work immediately. So I don't think there's any great merit in trying to time the bottom. The market will remain quite volatile. News flow such as last night where the Fed started to buy corporate bonds, who knows, eventually they might even buy equities, could mean that, the bottom could be much before what the overall situation could abate. So focus on fundamentals, focus on long term. I think there's a great opportunity for all of us.
So, Pramod, now the thing is that now the government is going to increase testing in a big way. From current 500 tests that are done per day, they're looking to spike the tests up to 8,000 tests per day. And that will reveal the real numbers and the real affected rate. If those numbers turn out to be adverse, does that scare the market, or does that spook the market to such an extent that we start to crumble much more than what the rest of the world does?
Well, I'm not sure even those numbers will be meaningful in the grand scheme of things. I'm not an expert. I don't think many of us are experts in this field where even the best of scientists are trying to figure out what the strain is all about and hence secure in a vaccine. So based on whatever little knowledge we have, it seems like especially we have the East Asian countries to look up to in terms of an example or a precedence. China and Korea particularly have shown how they can come out of this situation by a very strong imposition of self-isolation and self-quarantining or social distancing, if you may. And to that extent, I think we are seeing not just in India, but also in the Western economy, we perhaps took it a bit too lightly initially. But now with the changes coming in, whether it's a month or two, maybe 3 months, we could expect the rest of the world also to go the East Asia way, unless and until the whole system sort of collapses. So irrespective of the number of tests done, my sense is the number of infections out there are significantly higher. And as we've seen from the experience elsewhere as well, a bulk of the population, particularly under the age of 50, who are fit enough, healthy enough, will be able to pass through that infection even without having to get tested and get reported. So those cases may never get reported, but actually we are going through that phase. All we have to do is we ensure that we don't pass it on to people who are not able to withstand that infection,
right.
People who are elderly, people who are not healthy enough. So I think there's no need to panic. The numbers are what they are. Good thing is if we are increasing the testing capacity, we will be able to quarantine more such people and prevent this further. But the only option at our hand is to really implement social distancing, self-isolation and self-quarantining.
Sure. Pramod, good morning. Saurabh was here the other day, about a week back, and he mentioned that it's almost difficult to predict what the economic impact would be. So you try and predict what the businesses would do over the next 3, 4, 5 years long term. My question is, when you look at the high quality financials in your portfolio, for example, how do you assess whether the price damage into those is baking in the disruptions, a large portion of the disruptions or all the disruptions that may happen in the business over the course of the next 1 quarter, 2 quarter, or maybe 3? How are you assessing that for let's say the financial names?
Like I said, if the value of a business lies in the cash flows to perpetuity, 1, 2, even 4 quarters doesn't have a significant impact. Of course, the present value of these quarters is highest, but once we pass through this phase, it'll be in the past and hence unlikely to affect the fundamental value of this company. Yes, of course, in sectors like financials, the short term can have a longer term impact through the balance sheet. If you have a very weak liability franchise where disruptions like these, access to funding becomes a challenge, then your viability comes into question.
Right.
And if the viability is in question, then fundamental value.
Pramod, sorry, if I can just come in. Sorry. I'm because I want this. I want to understand this in a targeted fashion. The high quality franchises have seen a dip. Now, my question is, just argument's sake, I'm not asking you to comment on a stock, but let's say Bajaj Finance has corrected from wherever levels that it was at, but I'm talking about the price to book. The price to adjusted book as we see it must be around 5, 5.2, 5.5 or thereabouts. Correct me if I'm wrong. Now, how are you taking a call that this might be a good price to book to enter into or avoid this company for the time being?
Well, like I said, none of us know what's going to happen in the next 2, 3 quarters. What we can do is assess the strength of the Bajaj Finance franchise, for example, or an HDFC Bank franchise. Do they have the balance sheet to weather through what is going to be a difficult 2, 3, 4 quarter period, both in terms of the asset side? Obviously, given the complete halt to economic activity, there will be asset side issues in the form of NPAs coming up. So you need a strong enough balance sheet, a tier 1 capital to sustain through that period. And on top of it, the bigger thing for financials, and particularly those dependent on the wholesale borrowing market, are access to funding. Your reputation in the market, where wholesale lenders will continue to provide lines of credit to you, will remain key for any financier. And we have seen in the past, from the global financial crisis, from the subprime mortgage crisis, your liability side problems can have a bigger viability impact on you more than the asset side. If you're not able to continue to borrow money from the wholesale markets, then your existential questions come into play. So what we try and assess is, based on the financial companies that we've invested in, do their balance sheets, to their reputations in the wholesale market, to their lines of credit, are they strong enough to weather this storm? And in our case, we're quite comfortable with the financials companies that we own. And from that perspective, this reduction in price to book actually provides a great opportunity, because remember, I'll reiterate the point, it's unlikely that the fundamental value, the long-term fundamental value of these franchises have been hurt by what we've seen so far.
So, Pramod and Marcellus right now, obviously now as time passes, you keep getting more and more stocks on your watch list that you would want to go ahead and research further to take a call on whether or not it's worth an investment or no. You've enlisted, you and Saurabh, every time you guys have come on the platform, you've enlisted a few names that we know about. You liked Relaxo, you liked HDFC Bank, you liked DV's Lab. Is there anything that's come on the watch list now?
Yes, of course. From our case, the primary factor has to be the strength of the franchise. And we're less fussed about valuation, as we've talked about so many times in your channel as well. So to the extent that the strength of the franchise hasn't really changed in the events of the last 3 months, that factor is not a factor where we will actually look at a stock now. Yes, perhaps the same franchises are now trading at mouth-watering valuations. That might make us get a bit more aggressive in terms of deploying money. In fact, we have seen a pretty strong response from our client base as well, who've actually gone ahead and topped up their accounts and deployed more money to make use of the opportunity given by the market. So yes, the same franchises trading at significantly lower valuations is what is making us more aggressive than actually anything that was on the anvil, but we were a bit concerned about valuations, but now they seem attractive. We would rather deploy money in the same set of companies that we've always liked.
All right, got that. Pramod, aside from that, while we've been talking about individual stocks as well, have you been able to have conversations with any foreign investors and their outlook on investments in India?
Well, not much in our current avatar. Of course, a few conversations here and there, but I don't think anybody is looking at any specific opportunity now. The scare is at the market level. For most foreign investors, I think first is to handle the home market situation, which is what we are seeing from a flows perspective. Irrespective of which market you are, the whole EM as a basket has seen significant outflows over the last 2-3 weeks, and I would expect that to continue until there is some sense of abatement in terms of risk. So for now, I don't think anybody is making any calls. But yeah, they've always had at the back of this mind, particularly, say, a month ago when China was pretty much at the center of this crisis, and India not really had any sort of an incident here. People were looking at India in much more favorable light because, from a supply side perspective, India becomes a favorable alternative to China, which is the factory to the world, and hence the Western buyers who were extremely reliant on China would have to look at an alternative, and India was stacking up really well. And also the fact that we don't have too much exposure in terms of exports, we're not a significant part of the global supply chain. That also makes it a safe haven in a world which can get disrupted by events like this. Besides that, I think at this stage, from a risk aversion perspective, India is as risky as everything else.
Yeah, it certainly seems like that. But Pramod, appreciate you joining us and giving us some slice of how the thought process is right now when it comes to investing. Really helps people. Thanks so much.